Hello everybody, this is Howard the Teaserking coming to you today. Little different video. This is on stock analysis and investing. One of the things I do is I do a trend analysis on stocks. There's a couple of stocks I just want to tell you about just to see it. One of them, these are gold stocks. And there's a couple of steps to investing in this, but it's really a good way to make money. It's not day trading, but it could be in a day or it could be in a week. If you're interested. I don't believe in just buying a stock at $30 and just sitting on it, and a year later it's at $50 and I made $20. My analysis has been everything goes up and down. It goes up, it stops, it drops, there's profit taking, it goes back up, it drops, it goes back up. So you can make a lot more money if you just go along for the ride. When it's high, get out of it, drop, and then buy it on the drop, and then watch it run, and when it starts running, buy it, and then as it jumps up, then you sell it. So you're basically putting a target in place. So example, I buy this stock called Newmont Mining, which is a terrific gold stock. The first thing I do is watch the gold price. And so I have a very good understanding of classical economics and basically understand what makes gold move and the currency and things like that. So a war, anything that Trump does that he makes it risk and volatility will make gold go up. So the first thing I do is look at the news, see what's going on. Second thing I look at is what the gold price is. And if you've looked at the history of the gold price, you've seen lately it's been between $1,300 and $1,350. So you don't want to be emotional, and you don't want to, when it's going up, if it's at $1,350, I don't want to buy it, because think of it like this: there's nowhere for it to go unless some war breaks out or something catastrophic. It's going to go in this range between $13 and $13.50. At that point, you never want to buy at $13.50, and you never want to buy a stock near its high, because there's nowhere for it to go. Just think about it like that. So let's say the range of Newmont Mining is 38 to 42. Well, if it's selling at 41 and a half, it's got nowhere to go. So you can't buy it. You'll see it jump up, right? And it'll go up to 41.90. You don't want to buy it then, because the most it's going to go to is 42, and therefore there's no money to be made. Now, once in a while, it'll crack through its 52-week high and really jump and go to 43 or 44. But that's okay. You can catch that. If it does, then it'll drop, and then you can catch it going, okay, the new high is 44. But the way I do it, I watch the stock drop. And usually on Mondays, don't know why, but it does, it drops. Usually between 9:45 and 10:30, it drops. And if you look at the charts every day, all this buying goes on because it's after extended hour. So it'll go on at 8:30, 9, markets open at 9:30. All these buy orders get put in, and then at about 9:45 or 10, it's not cut in stone, but it's around there, it'll drop. And that's what I'm waiting for. And on that drop, I'm ready to buy. And I'm going to buy when I see it drop, and then it'll start bottoming out, and then it'll start going up. That's when I buy. I don't like to buy on down ticks. I like to buy when it's going up. So I forfeit a little bit of a nickel to say, but I know I'm going up. And if you watch this stock, it'll just zoom up like 40, 50 cents, and then it starts flattening out, and then it'll go drop down. So all you do is wait for the drop and then go forward with it as it's upticking, and it'll go 30, 40 cents. Now the key is to buy the neighborhood of 900 or 1,000 shares. It doesn't make sense to buy 100 shares that goes up 20 cents and you've made $20. If you buy 1,000 shares and it goes up 30 cents, you made $300. And you keep making $300, sometimes twice a day, it adds up. And that's what I do. I buy like 1,000 shares of this stock or 1,000 shares of another. I buy like in 1,000, maybe 900, depending on how much cash I have left. But I don't buy, it's silly to buy 100 shares of anything. So the other thing I'm looking at, I'm looking at the gold price. I'm looking at what's going on in the world. Okay, everything's just a normal day. I look at the gold price. It's at 13.10. I say to myself, I have very little low risk because it's not like gold's going to zero. It's not like gold's going to 500. It's not like gold's going to 1,000. Gold's sitting there. Maybe it'll drop to 1305, maybe 1300, but it's got an upside of 1350. And I'm not in this to sit for months and months and something bad happens and gold drops. You're in it watching the stock. So as the stock drops at 9:30, 9:45, 10 o'clock, normally, let's say 19 days out of 20, it's dropping. Then you watch what's gold doing. And if gold's up $5 when you wake up, because gold's going around the clock. So you wake up, it's 9 o'clock, gold's up $5 for the day. I know that stock's going to jump up. So I'm going to buy it on the dip. And then as it goes up, I keep watching. If it keeps going up, sometimes it'll go up, level off, go up some more. So you got to be comfortable with what your price is. But let's say it's at 39. I know I got till 41, 42 on it. My downside's maybe 38. So I know I don't have much of a risk, and even if it does drop to 38, which it shouldn't if you're buying on the uptick, you just wait. Within a week or two, it'll be back up to 40. So you have very little risk doing what I do, because so you're buying low, you're buying after it drops, so you got them priced in. So let's say 39, right? So let's say it starts at 39.30, and gold's even, or maybe up $1, and then it goes down to 39.10, and you've got it in your mind. The worst is 38. I can go up to 40, 41. 39.10 on the drop. It starts leveling off, starts going to 39.15. I buy it. Now, how long am I holding it to? Well, let's see. Normally in the afternoon it goes up unless some bad news happens. So what happens is you'll get a 30, 40 cent hike after 10:30-ish. So if you wait, and you'll see it, it's not exact timing, but there's always this drop around 10 o'clock-ish, and just watch it. It's the symbol's NEM. Just watch it. Go click it up, and you'll see it, and you'll see gold does that. You'll see all the gold stocks, quarter to 10, 10 to 10, and it drops till about 10:30 on a normal on a normal day, not every single day. It's what you're looking for. You buy 1,000 shares, let's say, or let's say 800. So let's say you're buying 800 shares. So it goes up 30 cents. You just made $240. As it gets higher and higher, and it's going. Now it starts leveling off. You're comfortable making $200, $300, $400. You sell it, and then it starts dropping again. And you can do this multiple times a day, or sometimes it just levels. Sometimes it goes up 40 cents. It's doing this, it starts to drop, it kicks back up, it just does this the rest of the day. Okay, you made your 40 cents, you can't rebuy it, you wait till 10, 10:30 the next day. Now this doesn't happen every day, but it happens, like I said, probably 90% of the time. You can get a 30 to 40 cent run on this stock. Not every gold stock. There's several gold stocks that don't do anything, they're in a 10-cent range. Here, you can get a 30 to 40 cent range normally, and therefore you know it's around 10:15, 10:30 you're looking to buy, and then once it hits and it starts going up, and sometimes it might go up and drop back, but eventually by the end of the day you could have made 10, 20, 30 cents. So, you got 800 shares, 30 cents is $240. You try to sell it by the end of the day because the next day at 10 o'clock it's dropping and there's going to be news out. So you don't want to really get caught holding the bag if you can. Now, sometimes you bought it at 39 and went down to 38.50. It never comes back for that day, and you're kind of going, okay, so I'll wait. Then you have to wait a few days. Then eventually it hits the streak and it goes up to 39.5 and you sell it. Sometimes it depends on how you're feeling. You might let it run. And some days, if like all of a sudden you see gold's up, somebody fires a missile at somebody, all of a sudden gold's up $10 an ounce. Those days, let it run, especially if gold's like where it is now at 13.10. You got till 13.50. So when gold's at 13.10, your stock's dropping a little. Now gold's up $10. Maybe you let it run that day, 50, 60, 70 cents. Again, you're buying, let's say 800, 900, 1,000. So let's say 1,000, keep it even. So your 1,000 shares, you then 70 cents, you made $700. You sell it at the peak, or not at the peak, but you can see it rising. Now you can't always guess the peak. You see it rising, then it flattens out, it might drop, and then a little bit later it goes up and takes another run. Okay, so you missed it, but let's say you made 50 cents on it. So 1,000 shares, you made $500. And then it ended up going up another 20 cents. Okay, you could have made $700, but I've seen it drop. And the worst thing is when it's up 500 and then it drops all the way back down to you're even or losing, you go, shit, I could have had $500 and I end up with nothing. So that's why you got to be prudent. Take your 500, and you wait. You see it going, let it run. Okay, it's level. Give it a little bit more, because when it drops, it'll drop 10, 20 cents like that. So what you want is, okay, it ran up. I got my 50 cents out of it. How much more room does it have? I mean, how many people are buying the stock? You get about 4 or 5 million shares traded. But how far can it run? So it ran 50 cents, 60 cents. Maybe it runs $1, but not a lot. So you get a 50, 60 cent run. Get the hell out of it. Take your 500. And then watch it, and it'll drop again because there's profit taking, just like what you're doing. There's always profit taking. It never just keeps going up. It always up. Okay, I made my money, profit take, boom. Okay, all the profit's coming, it's going down. It hits your point. It's back down to 39.10. Buy it. It goes back to 39.50. Sell it. Okay, and it keeps doing that. And occasionally it'll go up to 40. But you made your money, you can't complain. If you saw $500 on the ground, you'd pick it up, you made $500. So there's countless days. Sometimes I make $200. It goes up 20 cents, and then I'll see, and you're constantly watching gold. So let's say gold's up $10. All of a sudden, gold's going down. Now it's up $9. It's up $8. You'll notice the stock, boom, starts dropping. That's when you get out. So if you see gold dropping, then get the hell out of the stock because it's going to mirror gold. If you see gold jumping up, then get in because the stock's going to start going. So it does mirror the gold itself, the value of it. So if it's at 13.10, 13.20, you got room in gold to go to 13.50. If gold's at 13.45, I probably am not buying the stock unless something comes up. Now usually it's earnings. And the day before earnings, it always drops. But these gold stocks make money because the price of the gold is higher than what they are thinking because they're conservative. So it'll go up because they'll make earnings. And it'll get a nice, you'll see it drop like $1 the day before. And then earnings come out in the morning. We beat estimates, jump on it. And then it flies 50, 60, 70 cents. Maybe $1. Those are your days that you really make money. Or when gold jumps $10. Now gold's at 13.50. Otherwise I'm not buying it because gold has nowhere to go. Once you hit your price point, if it's a $42 stock is the 52-week high, and you're at 41.50, there's nowhere for it to run. Maybe you can get a 42, but more than likely, it's got nowhere to run. Nobody's gonna buy it at that point, which will create. It's got to go down or stay even. which is not what you want. So when gold's 1310, 1305, 1315, you're buying. When the stock's a 42 and it's down to 39, you're buying. Remember, you want it to drop when you want to buy. The emotion will come, it starts going up. Now everybody tries to buy when it starts going up. No, this is the selling time. As it's jumping up, you wait for it to start leveling and then get out of it. And it'll drop down for you and you can rebuy it either that day or a day or two later. But research the stock, it's a very good stock. I'll give you one more. And this other stock is... It's called Kirkland Lake. KL is the symbol. This stock is another butte stock for what I'm doing. Same thing. It just ran through its 52-week high. This is the leader in the industry. Newmont's a $40 stock. This is a $19 stock, and it just the 52-week high was 1905 2 days ago. It's now 1957. It ran through its 52-week high. So it's got a new ceiling. So now if you see this stock at 19, you jump on it. You can go up to 20 on it easy. You can buy more shares of it than Newmont. Let's say you can only afford 700 shares of Newmont. Is 700 times the 40 is 28,000. This you can buy 1,500 shares and it still wouldn't be, well, 1,000 shares is 20,000, so 1,500 is 30,000. So for the same amount, you have a little bit more risk, but you have a lot more reward because it's going to follow gold like Newmont. It's the leader, but what happens is if this stock, with 1,500 shares, it goes up 30 cents, you've now made $450. In my other example, if even, let's say you bought 800 shares, 800 times 30 is 240. Here, 1,500 times 30 is 450. So you get a lot more run. It's almost the same price you're paying as far as total cost for you. You really don't have a risk. These stocks aren't going to zero. It's not like you're going to buy Kirkland at 1957. You wait for the dip tomorrow. Let's say it goes down to 1930, 1920. You buy it. It's not going to zero. It's not going to 10. You'll see gold. If it starts dropping drastically and something major happens, which I don't foresee because it's the gold standard, it's not going to do that, then, you get out of it with a little bit of a loss. But the way I'm playing this, it's very, very hard. You're not going to lose because you as long as you're patient, you almost can't lose, right? So if I buy this stock at 1925, the only way I can lose is if Kirkland goes down to, let's say, 15. And I say, screw it, okay, I'll lose. But then I can turn around and buy it at 15 and watch it run up to 16 and I make my money back. So as long as you're patient, even if you buy it on the rise after it's low and it keeps dropping. And that happened to me last week in Newmont. I bought it on Monday at like 30, I think it was like 39.90, and it goes all the way down to 38. My thought is buy, buy, buy. So I bought more of it at the 39, and it jumps back up. I end up selling it at 40 and 10, $40.10. It took me 4 days. It kept going 39.30, 39.50, and I'm buying on the way up because I know it's going to hit 40. I mean, it's at 40 now. So as it runs, you just, you wait for it and just be patient, and then all of a sudden you make money. But you made money too because you didn't sell it, so you made that money back. So in a sense, I made $1,000 back because it went up a point, but really the net was I made like $100 or whatever, $150, but I didn't lose the 1,000, and then so I made all that back. So just be patient. It'll come up if you know you're not. Just look at the trends. This is what I do in football. It's trend analysis. You're watching what it should happen, and you got to know the variables. I know the variables in football and the matchups. Same thing here. I know why gold goes up. I watch gold when it's low. I know it's going to jump up. And the same thing, when it's high, I know it's dropping. Kirkland, it's hard to buy Kirkland when the 52-week high is 1957, and it's at 1957 now. So I'm going to wait till it drops to 19 to buy it. And if it goes to 20, I didn't lose, I just didn't make. And then it'll start dropping a little bit because there's always the profit taking. As you got profit taking, it'll drop and then it starts to rise. Boom, you can get. And this one runs too a good 40-50 cents every day. So that's what you're looking for. You buy 1,000, 1,500 shares of a $20 stock, and you just just pound it. I mean, but you got to be willing to make $200, $300, $400. Sometimes I make $100. Sometimes I buy it, it goes up. I buy 1,000 shares, it goes up 20 cents. I think it's going to get more. Then it starts tanking down. I can see gold's dropping. It's up 10 cents. I get out of it, and then it goes all the way down. And so I would have lost, and then it starts winding back up. So as gold drops, the stock price is going to drop. So sometimes you just take your profit and you say, well, okay, I made $100. That's better than losing. But you're not going to, as long as you're patient, most you probably have to wait is a week. If it does down and then starts going up and then does down and down and down. And some of these stocks, you'll see it. It'll just, the whole day, it'll just drop. So, but if you don't see that tail coming back up, you don't buy it. You wait for that tail and be patient. You'll make more money that way. But if I bought Kirkland at 1957 and I hold it for a year and maybe it goes to 22 or 23.57, I made $4. Okay, let's say I bought 2,000 shares, so I make whatever so I make, what's that, $8,000. But if I buy it the way I'm doing it without a lot of risk, and I buy 2,000 shares and it goes up 40 cents and I make 800, and it goes up 40 cents again, I make 800. I make a hell of a lot more making 400, making 500. And I'm talking a day or two, and I might make 200. I'm very rarely losing because on the days it does keep dropping, and I bought it at 19 and went down to 1860. Okay, don't panic. Actually, it's probably good to buy at 1860. And then eventually it turns up because it's gold, and then it runs up to 20. So maybe it took a week, maybe it took 2 weeks, but eventually the 19 goes to 20, and you make the money. The problem is it doesn't go up to 30. It goes to 20 and then goes back with profit taking. Then it goes up. Oh, gold's down. Oh, okay, the stock's going down. Okay, gold's up, and you notice gold doesn't just sit. It goes 13.10, up $5 today, up 10 and down 5. 1,300, 1,350, 13. So it just randomly moves. So that's why you don't just hold it. You make a whole lot more, and there's very, very little risk in doing what I'm doing, because you're in and out pretty much every day, or maybe every 3 or 4 days, maybe a week at the most. But if you're watching it, maybe it's every day or every 2 days. Today I bought it, made 20 cents on it, and sold it. And then it dropped, and it was just a short range today. I thought with the Israelis firing on Iraq that gold was up $9 when I woke up. I thought, oh, it's going to go $20, $30, but it never did. And I saw gold go down to $7 up. So it went from 10 up to 8 up to 7 up. So I got out, and I made 20 cents or 20 cents times 1,000 shares. So I make $200, which is fine, but that's all I could make today. Tomorrow we'll see what happens. So you always wake up, check the price of gold. You got to know the range of gold. You got to know the range of your stocks. Yeah, the Fed funds rate when it gets higher, but it's so low that people aren't running to buy currency and get rid of gold. I mean, that's very hard to believe. And so you're looking at that, and basically I think you just got your range. But if you've got to be comfortable to buy 1,000 shares. Let's say 1,000 shares of Kirkland. So it's $20. It's $19 a share. Let's say times 1,000 is 19,000. So you make 20, 30 cents. Let's say you make 30 cents. You just made $300. So you got to be comfortable that $300 is okay, because I can make $300 tomorrow and the next day and the next. And before I know it, I've made $3 grand, and then I've made 10 grand. And then instead of buying 1,000 shares, I'm buying 1,500 shares. So 20 cents of 1,500 is more than 20 cents at 1,000. So it's kind of like football, where you're money managing. The more you make, the more you bet. It's the same thing here. So you start out. Now, you can start out with less if you can't afford that. Let's say you buy, 100 shares is all you can afford. Goes up 10 cents, you're going to make $10, unfortunately. So you can do it that way, but I suggest a minimum of 500 shares. That way it goes up 20 cents, you made $100, and that'll add up. Again, you have very little risk because this is not going anywhere. It's not, all it can do is drop a little bit, but as long as gold ain't going anywhere, you can't corrupt gold, you can't inflate gold. That's why it's beautiful. So you just watch it, and as it gyrates between 1,300 and 1,350, you buy it, so you know when to buy it, and like if the stock's really high, if the stock just had a 70-cent run up, you're not buying it then. You're selling it, or if you didn't buy it and you missed it, okay. You can never be upset if you missed it, you didn't lose any money. You only be upset when you lose. You can be upset when you're up 500 and it tanks all the way back down, and now you're up $10. Then you can be upset, but again, you didn't lose. Just don't sell it when you're down. If it's not down too much, 50, 60 cents, it'll pop back up. So as long as you can hold it and wait till it pops back up, you're gold, because it'll then go back up, and you'll make your money, and just be content making $200, $300, $400. Some days you'll make $1,000. It'll go up a point, you'll make $1,000, but they're not going to run up $30 on you. All right, Newmont's gone from 33, 34 2 years ago. Now it's 41, 42, and it's been 42, and it came all the way back down to 35. So you basically, you don't want to hold it that long. That's why you don't. I mean, if I bought it at 40, now I'm back to 40. Oh, I'm even. Well, no, but if I've been buying and selling the way I've been doing it with very little risk, then you're going to make 100 times the money, because it's 300 a day, 400 a day, 200 a day. And very hard to lose as long as you're patient. I'll just wait till it kicks up. When it kicks up, I'm selling. I'm up 10 cents, but I'm not down 60 anymore. So if you can play that and be patient and be happy to make 200, 300, 400 every, a couple times a week, maybe every day. I've had doubles. I've had a stock, I bought it. In 10 minutes, it went up 30 cents. I sold it. It then dropped back at 10 o'clock. I bought it again. It went up another 30 or 40, and then I sold it. I made a double that day. And it'll peak and valley, because it's never going to go up. Remember, it's up, it's choppy. So you want to buy in the low when it starts turning. And you'll watch the graphs. It'll zoom 30, 40 cents. Just boom, boom, boom. But then realize, okay, there's no more buying. It's not going to keep going. So it's gone up 30 cents. You'll see the chart, boom, boom, boom. And then you realize, okay, it's done. It's run out of steam. Now they're starting to drop. Then I get out. And then you could have double hits where then it jumps back up again. And that's fine. As long as you've made your money. Okay, I made 400. I could have made 8. Okay, I still made 4. And I didn't lose. And you're not going to lose a lot with this system, or it's really just my own natural skill set of rating trend analysis. So anyway, this is the Teaserking, making you money more ways than one. All right, everybody, have a good time. Have a nice day. www.teaserking.com. Football, baseball, NBA Finals. One quick note on that. Bet the loser back. One of my friends says, well, what does that mean? Houston Golden State, Game 1. Whoever wins, I say Houston wins. You bet Golden State in Game 2, they win. You bet Houston in Game 3, they win. You bet Golden State in Game 4, all the way through the series. Because the loser gets pissed off, the winner relaxes, and these teams are even. If the teams aren't even, it won't work. Because then, like Cleveland beats Toronto 4 straight, they weren't even. And the other one, Cleveland, Boston, I'd probably do the same, but really hit it hard when Cleveland is the dog and they lost. Then you hit it hard because LeBron will get pissed. and it's going to be hard for Boston to win 2 straight. Especially, if they win game 1, you bet a ton on Cleveland in game 2, and they'll be the dog. Anytime Cleveland's the dog, it's a good bet, except for when they're playing Golden State in the finals. All right, everybody. Well, good luck, and I hope y'all make some good money. Again, it's KL Kirkland, NEM, Newmont Mining, and just watch the overall gold. You can go on to Bloomberg or wherever. Watch the gold itself. Watch the price. As it's dropping, then you're getting ready to buy. As it jumps up, you're getting ready to sell. And you don't want to buy when it's $13.50, and you don't want to sell when it's 13. When it's 13, you want to buy. All right, everybody. Have a great day. Teaserking.